Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, February the 21st, the year's 2022. Let's talk trading. Price, part 11. These videos are for educational purposes only. Your results may differ from mine. And just a friendly reminder, always have your risk management employed, deployed. In other words, make sure you use your stop loss. Okay, looking at the month so far, we're in the last full trading week of the month here, and the pound's 168 pips above the open, 32 off the high, and 177 off the low. And we're crossing above the bottom of the previous day's candle right now. And we're 6 pips above the pivot and 26 above the daily open. All the gaps filled, so anybody watching last night's video, there was an opportunity to pick up a couple of those gap fills. Maybe you got them. You can see right now we're above that weekly pivot point by 36 pips. And we're still putting in the range for the opening range for the week here. You can see we're above the opening range for the year and for the month. And you can almost consider the opening range for the month an inside bar to the opening range of the year. Speaking of the year, we're 86 pips above the yearly open at the moment. Inside bar action. 5 weeks ago, we had a weekly inside bar, and we're in that area. See if we're going to get a breakout this week or not. For the day, the pound's at 57 pips of range. 3 pairs are over 100 pips. So I think today's a holiday. I'm not sure. Let's see, on this calendar, it says it's Washington's birthday observed, President's Day. So I'm not sure if the market's taking a day off. I don't think they are. We are above the weekly daily open once again, 28 pips, and you can see we came down here, touched the buy zone, and took off again. Rats, we're in between the two rat zones. The range is just large enough. So I don't know if any of you green rats out there got a chance to get some cheese here. Back to the pivots. Near the pivot, the bias is short. That's not proving to be profitable this time. It says near R1, bias is short. That proved to be profitable. Daily pivot's been taken out. Weekly pivot once again hasn't, and the monthly has. So have to look to see if this week's pivot comes out. We're about to get into the upper wick zone from the previous day's candle here. Right here at 36.13.8. And you know, price doesn't like staying in the wick zone. So you see it came out, touched in here, and came back out. Came in here a couple times, came back out. Price just doesn't like staying in the wick zone. And you can see here, it's saying the last 100 bars, 60 times it closed outside. And that's H1 bars. If we switch over to daily, 74% of the time. So that means at the end of the day, 74% of the time, price will close outside of the wick zone. That's one of the higher percentage trades, and it's one of the ones I like to trade. Okay, on the higher low, lower high scalper, Lots of price action here. You can see it. The blue dots are where you buy, the red dots are where you sell, or diamonds rather, they're not dots. And the smaller dots are. See, here's the higher low right there. Just came back, and just a few minutes ago, we had a trigger here at 07. The previous trigger was at 06, so jumping in at either one of those would have paid off. And this is something you can do pretty much every day, all day. Especially, well, maybe not all day. It really works well during London and New York sessions, not so much in the Asian session. It's kind of slow trading. Wall mall lines here with the sweet spot goal. You can see we had a long trigger at 10. Each time the past 3 hours, price keeps opening between 10 and the double low. And somebody was asking me about did I have an indicator for the ATR zones, kind of like the crash zones, and the ATR lines, high or low. I wrote that a long time ago. How long ago? Well, actually, I updated it last year, but I think I wrote it around 2008 or 10 or something. Anyway, what this will do is you tell it ATR start, so ATR 2, run through ATR 14, determine what's the min and the max, and then in this case, from the daily low plus the min, daily low plus the max, you get these ATR ranges. And then you can add multiple copies, so you can do it for the week and for the month. And there's also the version just plain old ATR lines where you can actually get the ATR from the open. And that's something I've been working on lately, and I think I'll probably share it a little bit later this week as I fine tune it. Once again, simple price. We're looking at, for every hour, we have the M1 high for the opening range, then the opening range for M5, and then the opening range for M15, and also opening range for M30. And we just look to take those breakouts when they occur. So you can put this all the way down to M1, and then you can see the price action. So when this M5 break, the opening range break, that was good for about 4 pips if you were quick enough. Once again, just simple horizontal line trading, taking advantage of price. And one of the things about price is it moves, and it moves away from a line or moves across a line. And you can see here, there was some indecision here, the 10 line, which is a wall mall line, but then price broke through. Now we're coming back the other way. And this has the same indicator. I'm wondering why I have this on here twice. There was something I must have wanted to show on this one. Yes. Once again, talking about price and it moves. I wrote a bunch of multimeters here. This is the CLMA right here. So EMA 5, which is what I use to make indicator 2. And I put the distance the price is. Red, it's below, green above. But on the 5-minute chart, if this gets above 4 or 5, it'll usually revert back. And on M1, if it gets above 2, it will usually revert back. So this helps plan trades. And the way I set this indicator 2 up, this one here, I made a couple enhancements. You can show a trade, but you can also have a threshold where this will go red or green if it's far enough away, signaling you've got a buy or short opportunity. based on the distance from that EMA. It's just a basically reversion to the mean type trading, but I don't usually use it standalone. I would use it in conjunction with, say, the higher low, lower high boxes, or trading across these lines. So for example here, I would imagine from here to here was more than 2 pips. So I would take that crossover of the M1 high, which was the opening range. Now, do I get burned if I would have done that? Maybe, maybe not. But then again, you can see here the dots are coming down, so you'd be swimming against the stream, against the current. So you want to be careful. Not to mention, this cross happened on a bear candle, so you might just pass up that trade and wait for another one. And one of the things I've also noticed is when price makes a high here, a relative high, we can even go back and look at the 3-level ZZ. When price is making these relative highs and you see it come here and it fails to make it, I mean, this is just making a lower high relative to this one. So this ball is lower than this ball. And then price, say, breaks through this high or low. These are the types of trades where you have confirmation. So, and that's what you want to look for when you take a trade. So for example, here you've got a 3, 2, 2. It almost hit this lower high. And we saw earlier that we had distance from the MA, a moving average, and there might have been enough difference to play the reversion. Also, you can see here I've also made a bunch of multimeters last year. So we know the distance closed to open, closed the previous open, closed the previous high, closed the previous low. I think I got it. Looks like I missed a couple of these. What I did was I set these indicators up so if the value is less than 10, it will put in the points rather, so you can see just how close it is and fine tune your entries. The main one I like to look at is close minus open, but I made them all. Like I said, it looks like I've got a couple I have to update with the new code. And the other thing is you can see here how price has just been channeling. I mean, it's just clear as a bell right here. So this is what they would either call accumulation or distribution, and then they're either going to mark it up or mark it down. And so when you can see this happening, this is when you can start to take advantage, entering, exiting accordingly. And sometimes what you might want to do is do what I would say a look back. So for example, here you had a 3-ball here and a 3-ball here, but you had a 2-ball here. So when price drops below that and starts to come back up, you can take a trade there. And then in this case, you had a 3 and a 2, and then a 1 and a 1 in between. But then from this 3 and 2, you had a 3 and a 1 here, or 2 and a 1 here. And so once again, you kind of look to the left, see where price rejected before, and then see if it repeats. Sometimes it will, sometimes it won't. It's trading. Once again, these are for educational purposes only. So, fellow traders, I hope you have a profitable week. And when you sit down at your trading terminal, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.